Hello, thanks for tuning into this episode. Before we start, FinTech Focus TV is brought to you by Harrington Starr, global leaders in financial technology recruitment. Head to the Harrington Starr website and check the links below so you can download the latest copy of the Financial Technologist magazine. And also, we've got the TradFi and DeFi Era of Convergence documentary coming up. If you're interested in the merger of the two, please get in touch. Thanks a lot and enjoy the show. Hello and welcome to another episode of FinTech Focus TV with me, a slightly croaky Toby today. I am absolutely delighted, however, to welcome into the studio George from Synetec. How are you?
Well, thank you. Thanks for having me.
Absolutely brilliant to have you in here. And listen, we've been talking beforehand, had a little chat a couple of weeks ago as well. Really interesting story to go through today and listen and find out a little bit more about the business. Before we go into the what's happening in the world of buy side, which is a subject I can't wait to dive into. Tell us a little bit about yourself. Tell us a little bit about Synetec and what you guys are doing at the moment.
So we're a tech and data consultancy. So mostly working with buy-side asset managers in the UK and continental Europe, and they're actually starting to creep across to the States, which is
the big world,
which is cool. I mean, a couple of time difference things that are going on now, but that's fantastic. Need to catch a couple of the sports games over there. It's coming up soon.
Also good fun.
So that's good, and we've been going for 12 years.
Yep.
Really.
Same as us.
Oh, is that so?
Yeah.
Okay, nice. So it's, I mean, you got a couple of scars after 12 years, but it's been a great journey. Nice.
It was obviously a good vintage for companies back in 2020.
I need to buy a bottle of wine, actually. It's got the 12 years on that. I use a good idea. So you've grown nicely, and really what I'm most pleased about, actually, is that a lot of our customers have been with us for a long time. Quite good. It's nice. It's relationships, right? You want to have good relationships, good partnerships. So that's great. And really, my background, actually, as you can hear from the accent, I come from South Africa. I'm a Greek South African. And had a consultancy in South Africa, which I successfully exited in 2000 already.
Okay.
But also in the finance world, which really served me well when I came over here, which was 22 years ago, a long time now. And really have been in the finance industry since then, so it's been great.
It's an amazing industry, isn't it? And as you said, look, there's what I loved about that intro is just talking about clients that you've been with for a long time as well. And I think that sort of speaks volumes about you and the business, but also speaks volumes about getting it right. And in that consultancy world, it's not always easy to do that, to create those long-term scenarios. Tell us a little bit about why that happens for you.
Yeah, that's a great question. And I think it's down to us as people. And I think, being a leader, you attract the kind of people that you sort of with your values, your principles. And I think for me, if we can't add value and then have that valued in turn, what are we doing it for? So that's an important thing. I think, everyone that we bring into the business needs to value our customers and really making a difference for them. And if that's what gets us out of bed in the morning. And I think when those are your focuses and your sort of priorities, you tend to attract companies that value that. And then it becomes a long-term partnership because it is, that kind of commitment and loyalty. You don't find it every day these days.
Definitely. No, you're absolutely right. And I think consulting is obviously a massive industry on its own. Talk to us about the sort of problems that you're looking at and how you help, what you're doing to help your customers.
So I think as a consultancy, you tend to you evolve, right? As the challenges in the world are changing, you have to evolve to meet those challenges. What you did and what was successful 10 years ago is not the same as now necessarily, right? Demands change, so we've evolved, and I think as that's happened, it's been in response to what's been going on in the financial space, in the markets and that kind of stuff. So I think, if we look at that and that's how Synetec really has evolved to match that and make sure we can meet the needs of our customers, if that makes sense.
Yeah, it does. Yeah, I think it's really interesting. And it is, a rapidly evolving market. And that's something I really want to get into with you because I love the buy-side space. And I think it's been underserved in terms of technological innovation over recent years. But I think that's changing. But if I go back 5-10 years, there was probably some good tech in it, but it was mainly enterprise-based stuff, and it wasn't that agile. I think over the last, in fact, I remember going to a sort of beauty parade of tech vendors within the buy-side space, probably about 7 years ago, and being really surprised about how difficult it was to find companies who were really serving that industry from a tech product perspective. I think that's changed dramatically, and we've seen a real sort of upsurge of really interesting companies doing cool stuff in that area. And I think them embracing technology and data in a far greater way, which is a natural sort of fit for me in terms of what the very nature of the buy side full stop. So I want to talk a little bit about that journey with you, and go back to the sort of buy side world. Let's start off with the pre-2008 buy side. What did it look like then?
That was, I mean, obviously pre-crash, kind of from in our lifetime. That's the crash we referred to. So it was a lot of best of breed type of architecture, technology, a lot of big bespoke applications that were around. And then what you saw really why it changed in 2008 is really margins just got eroded and put under pressure. And then so what you saw is effectively the consolidation of that and a lot of outsourcing, where companies were realizing we've got to protect our margin here. How are we going to do this? What can we outsource? How can we cut costs? So, from a tech perspective, and certainly building your own tech perspective, it's a costly enterprise. You've got to be able to afford it. We all want bespoke suits, but it's a lot more expensive than an off the shelf one. It's the same thing, right? You'd rather have it cut just to measure.
Yeah,
but
I love that analogy.
You have to be able to afford it, So I think with that, everything was, a lot of stuff was outsourced, whether you talk about middle office, back office services and that kind of stuff, as well as technology. So systems that potentially were bespoke or required a lot of development around them were replaced with SaaS offerings. So you saw big movement to that. And if you remember pre-2008, what was the industry's impression of public cloud?
I mean, look, that's one of my favourite soapbox moments. I think it's still, it's not only pre-2008, it's been going for ages, isn't it? It's only it took a pandemic to work for financial services to really start to build trust in the area.
Yeah, and so interesting. You used the word trust. So I would say to you, was it trust, or was it a case of we need to cut this budget? We're going with it. It was almost like they were forced into it to some extent.
Yeah.
But it was good because it moved the world on, and obviously there were some big applications out there that were well known. I guess probably you'd look at Salesforce as being the one the go-to one that you could refer to. So that became more. Before it was we've got on-prem, don't touch it. It's ours. We do our data's.
The cloud's gain's very much been Slough's loss, hasn't it?
Exactly. So it changed in 2008, and over that time period, it morphed into the SaaS and outsourced services. And you mentioned it a few years ago when you said, where's the innovation? The innovation now has been crazy, and it's because of that. It's actually encouraged and invested in innovation, if you think about it, because before, everyone wanted their own things in their own way. Now they were prepared to innovate. And what also became is changes were happening more frequently. Again, pre-2008, you'd have a system and you just stick with it.
Because it was too risky to move, wasn't it?
Exactly.
Now, and expensive.
Or even since then, shall we say, more open to moving, more educated buyers, more promiscuous buyers. Can I say that? Do you know what I mean? Where they say that I like what that person's doing over there. I want some of that. So that's 2008. But interestingly now, that I feel is coming to an end. And I don't think it's coming to an end necessarily because maybe what's happening in the markets today, what we've been hearing in terms of a narrative for the last couple of months, but more around what businesses actually need to evolve. So if you think about the SaaS and all of that and everything's outsourced, great. But what's happening is, I've coined a term that we use internally called data independence. And what I mean by that is that you need to own your own data. You need to be able to use your data to give you an advantage. And you need to see that data in a way that makes sense for you. Now, the challenge with the SaaS offerings are that they effectively, whilst they're great, they typically, what happens for let's say a small to medium company, they will have one, let's say a portfolio management system. They've got that there, and that's where most of their data sits. And if they potentially want to make changes, they'll make changes on top of that database if they need to, or around their database,
Yeah,
shall we
yeah.
say, which even though they can afford to be promiscuous and move, it locks them into that data.
Yeah.
And they move, what happens to all that historic data that they need? If you add on top of that all the alternative data sources that are out there these days and how important those are to making investment decisions, it's moved on, right? How you make investment decisions, not let's look at the PE ratio. I mean, it's actually about, I'm looking to buy a supermarket chain in South America, invest in it. Okay, what does that look like? Let's look beyond what the accounts say. Let's look at sentiment. Are we looking at Twitter? Are we looking at Instagram? Where's the greatest density population? So we're talking about bringing in a whole bunch of disparate data sources. Now we need to bring that in. We need to make sense of it in our world, and then be able to make investment decisions. So if you think about data in almost three sections, you've got let's say the static sort of regulatory reporting stuff, boring, you've got to do it, you stay out of trouble, keep doing that. That's yawn. We don't want,
Some people absolutely love that area.
Sorry, I'm probably offending half the listeners. Sorry about anyone in compliance. I'm sorry. Then there's
I think they know.
Do they know? They secretly know. Then there's the kind of internal sort of the risk management type of reporting that you need to have to run your business and manage your risk. And there's the other reporting, which is actually reporting, but information that you need to analyze in order to be able to differentiate, make decisions, investment decisions, those kind of things. Now, if you look at those three sections as three different data pieces, you need to consolidate that effectively into what makes sense for you, and you need to own that, and you need to be able to enrich that. Now, here's the rub. There are SaaS offerings to fix that issue itself. Some of them are brilliant, but the problem is you're then locked in. So it's still not your data. And I look, I mean, maybe if I was a SaaS offering person, I wouldn't say this. But the point is, I don't like that from a consulting perspective. I think we've had an overreaction to everything's bespoke. We don't want it too off the shelf because there's key man dependencies. But if we go one way where we just have a whole bunch of SaaS offerings and we don't actually own the data ourselves, we're missing a trick, and potentially we are at risk, because when margins do get crunched again, and it could be in 3 months' time, and we're trying to get rid of some big expensive SaaS licensing off our books, well, how are you going to do that? You don't own your data, and you're also limited to what you can do in terms of utilizing that data and getting the most out of it. So there's a problem, and a problem coming, which is what, I mean, look, it could be 6 months, you could call me back here and say, gee, what were you talking about?
Yeah. But I think no one's got a complete crystal ball at the moment, have they? I mean, it's so volatile, and there's so much speculation about what can and can't happen. And I think what the last couple of years has shown is that no matter what anyone's predictions are, no one's really got a clue at the moment, have they? So it's about making sure you're there and ready for every different sort of scenario that may come up. Now, look, the smart money is exactly where you're at right now, and that creates this sort of significant issue out there in the marketplace that people need to be ready for. And I think there's a natural complacency, in my opinion, that sits in institutions that requires and necessitates that sort of counsel from companies like yourselves who can say, look, we're looking at this problem across a wide spread, because sometimes when you're siloed and you're tunnel vision on looking at your market, all of a sudden there's something that's happening over there that you just don't get the access to. And I think that sort of holistic view of the space gives you a lot of comfort to the companies you must be working with, right?
Yeah, absolutely. I think so. And I think certainly some of the companies we're working with are quite progressive in how they're trying to utilize their data and get ready sort of for what they feel is coming. But it's interesting as well is they almost want to be able to have the ability to be more promiscuous, if that makes sense, because they want to say, I want to be able to switch things in and out as I want. It might be that for 6 months I really want to get some of that benefit, but then I don't want it to be costly or I'm tied into them for ages. How do I do that? How do I plug and play in the real world? And that's where the conversation is quite interesting in terms of how modular can you make it? How dynamic can you be?
Yeah, I think it's really, really interesting, because the thing you've brought up there is data for me in the financial services space is a gold mine of opportunity. It's something people have been speaking about fairly intensively for 10 years, But I don't think there's a massive amount of use cases of where it's been a genuine game changer for businesses, which really surprised me, because you utilise something I talk about a lot, which is the supermarket sort of piece there. And actually, if you look at retail and commerce in general, e-commerce, is they are the masters of data, and it informs every part of decision making into it. I remember reading years ago about Tesco Club Card and its effect on their business and how it basically turbocharged them to the top of the supermarket food chain effectively. And I think that's the same opportunity that you see in banks, but there's still that reticence, or I guess it goes back to the whole thing of SaaS adoption, cloud adoption. Within the spaces, there's a conservatism that sort of tap dances around data at various different stages. What do you think the opportunity looks like?
That's a great question, and I think to add more context to that question, there's a great book that I read called the Checklist Manifesto.
I love it. It's one of my favourite books.
Okay.
Yeah.
So I think there's a little bit of that going on.
Yeah.
So the context again for the listeners, there was the surgeons, and they were having a lot of people die on the tables.
Yeah.
And it was because the basics, not necessarily the basics, but some of the things were forgotten in the heat of the moment, etc. We're all human.
Yeah.
But there was
It's amazing how simple it was as well, wasn't it? 3-4 things rather than a whole list of stuff. It was, if you wash your hands and remember to wash your hands before or after surgery, it's going to save a lot of lives.
It was brilliant.
It was amazing, wasn't it?
It's brilliant. I mean,
and the cleared for takeoff thing as well.
That's right. Yeah. No, I'm glad you've read the book. Otherwise, I'd be explaining it a lot more. But so interestingly enough, and the other thing you can do, you can build on that, right? You retain the knowledge, and you're building on the knowledge, because every time you make a mistake, brilliant, we can learn from that. We build it in. Now, I think the same thing is if you think about portfolio managers to some extent, right? I think historically, not so much anymore. It's changing, but there was a dark arts, there was a magic, there was a bit of voodoo. This is how it happens. Don't mess with my magic. I have the Midas touch. Sprinkle my fairy dust.
Yeah.
Now, I think the challenge with the change is that the data is taking the mysticism out of it. It's actually putting into context some of that magic. It's putting it into a logical decision tree to some extent. And therefore, some of the more progressive companies are embracing that, but maybe some are not open to it just yet, and that will happen. So I think going back to your question, which you asked, I think what's actually happening is not the fact that data can help make decisions. I think we all agree on that. Actually, the biggest challenge, it seems, to make practical use of that is how do we understand the answers, and can we understand why those answers are there? So, for example, which supermarket chain to buy, in Latin America as an example, you can't just, Douglas Adams, you can't just say 42. What do you mean 42? So the actual explaining of why you get to that decision is actually
the story. It's the
narrative,
data
the story.
that brings the story to life, isn't it?
100% right. I think Gartner did a study recently, a couple of days ago actually, about that. Is it the visualization? Is it the narrative? Is it the story in terms of data bringing things to life? Everyone was saying visualization, but actually, it turns out the answer was the narrative. The story.
Yeah. The two I think go very well hand in hand, because if you can take that data and showcase it, that's one thing. But actually, then to bring the story behind it. I think I've spoken to you about it before. I'm a big fan of sports, and I think that sports and sports data has allowed people to basically make the right run at the right time to score the goal. And I think if you look at that, there's a lot of analytics businesses that I think are really interesting at the moment. They're helping traders to make the right decisions at the right time, based on when to trade, when to sleep, how much sleep they should have, when they should be doing things. It's phenomenal stuff that I find fascinating, and you realise how movable it is from place to place. There was a poll I saw on LinkedIn today, actually, which I'll throw into the conversation for you, which I thought was really interesting. It was a 50-50 split, more or less.
Okay.
Where should data sit in a business? Is it with the business, or is it with technology?
Sure. Massive question.
That is a question, isn't it? What's your view on it?
I think with the business.
Yeah.
I mean, data only.
I went that way.
But I mean, it supports business decisions. That's what it should do. It's a support tool. And if you don't, and I think whilst you need technology to implement it and look after it and babysit it to some extent, because it needs watering and feeding. Let's not kid. It doesn't just, oh, there we go, we've done it. Done. The real thing, without the domain expertise and the business insights, you aren't going to get the value out.
Yeah, it's kind of one of those sort of questions where it needs to sit in both, doesn't it? Because I was having this conversation again yesterday with someone else saying that you can get very frustrated with the stuff that comes through from data if it's not translated effectively. So if you've got loads of data coming to you and it's telling you a story, but that story isn't being translated into real world words effectively, it becomes a state of frustration, which is probably where it sort of disappears sometimes in the ether. I think it's really interesting.
Interesting also to add to that, I was reading a great book called The McKinsey Way.
I've got it, I haven't read it yet.
It's really good. So what was really interesting was the way they come and attack, sort of tackle problems. And they were saying they start with the narrative and then they go with the data, but they've used the data to back up their hypothesis.
That's interesting.
And then they use the data to show why the hypothesis is actually true or not.
Yeah.
So here's the story, the narrative, and now we'll prove it with data. Which again, I guess if you think about it,
goes beyond the gut, doesn't it? Yeah, it's really interesting. It's because you can make it argue both ways, wouldn't you? And I would suggest that if you're a technology-driven head, you would probably look to do it the other way. I would suggest say, look, let's get the data and let the data tell the story. But it's a really interesting. I mean, we could go on for ages about that.
Well, it's very interesting, and I think the other thing I throw into that before you move on is there's the constant or forever kind of challenge of, if you go with your gut first, you're going to make the same decisions over and over again. That's the challenge, isn't it? You look at something, you're experienced, right? If you look at something in your domain where you're an authority, you can look at that and go, that's not right.
Yeah.
And maybe someone is not as experienced will go, but what do you mean? The theory says this. And you go, I know it's not. And that serves you very well 90% of the time, 80% of the time. But how do you evolve if you don't flip it around every now and again, or let data prove you wrong at least?
Yeah, it's fascinating, isn't it? And when you're looking at there's all sorts of biases that can come through from experience. And so, again, whilst that's there can also be a danger around that, right? Because you're saying that it's kind of like that. This is the way we've always done it. And you can get that. You can always get data to back your story if you want to find the data to back your story. But conversely, if you put another set of data in there to show something different, there's always another. I just think it's interesting to show how it can go the other way. Let's look at your market today. So let's look at that sort of SME buy-side space and say, what can we expect it to look like? Where are we today? We mentioned a little bit about what people can be looking at 3 months, 6 months, maybe down the line. What are the things that will be keeping people up at the moment, and what should they be doing about it?
So, great question. I think we're going to see a consolidation, certainly, of the technology that's being used, and I certainly think more companies are and will continue to take more responsibility for their own data. They will need to own it, and they will need to control the reporting rather than it coming through a particular one of their products or one of their platforms. So they will start owning the reporting more and more for two reasons. Firstly, in order to get more leverage out of it, but also there's probably going to be a cost-cutting exercise coming in the next 6 months, which certainly looks that way. So, let's reduce some license fees. What are we going to do? Let's pick on that one and that one. Okay, we still need those reports. We still need the understanding. We still need to make good decisions. Okay, let's create that. I don't think we're talking about going pre-2008 in terms of that because it's too expensive. But I think the other thing to consider is there's more offerings out there that allow you to self-serve, which is where we are helping customers. We are helping them self-service so that, Microsoft, AWS, with all this public cloud emergence and the technologies and tools around that are amazing. So you can have something that's customized rather than bespoke. So there's no risk. There's not the cost associated to it. And in fact, you can drop your cost but still allow you to have not quite the bespoke suit, but close to. That's my call.
That's a big call, and do you know what? I absolutely agree with that. I think there's a really interesting time coming up for the space. We are living in a macroeconomic situation that's perilous. I would probably say to where it is, but I think that drives, to me, optimization and efficiency on the menu, and within that, there's that technology plays never more of a significant part. So I think technology really threw itself to the saviour of the industry of basically every industry in 2020, and that's universal across medicine all the way through to every other area of it. I think it plays a really significant part to have a really robust financial services industry which is driven by cutting edge technology. So I think it's a really interesting time, and there's a lot of things that people can do right over that period. Let's finish by talking about you guys. What's the rest of the year look like? What's exciting? What comes up next for the business?
What's exciting, I think we're trying to grow quite aggressively. What I mean by that is just bringing in the staff. I think that's also something we probably didn't mention, with this emergence of technology and sorting all this out. There's a real shortage of the tech skills, massive. So we have it just as much as everyone else. The growth needs to be supported by the right people. Beginning of the conversation, we're talking about looking after our customers. We need to bring in the right people for us. So the rest of the year is keeping,
especially when you start off with those right people being so important to the longevity of you, because it's so interesting at the moment, isn't it, with that market. Sorry to cut across you, but it's my favourite subject, obviously. But when you look at that talent tightening at the moment, people are asking me at the moment, saying, do you think the macroeconomics will make it easier to find talent? And actually, I think that I'm not foreseeing or seeing at the moment, our data isn't showing us any sort of tightening. There's a massive drive for people to have talent because of that optimization in the space. So I think it probably, if anything, makes it even more difficult, which is why I'm a massive shouter of companies really making sure they've got their story right about why they're a great place to work, why they're working with interesting technology and interesting projects, and how they stand out from someone who's always going to get a good talent at the moment, is going to get 3-4 offers. And it's got to be about buying into people like you to say this is what we can do and why we're great.
Totally. I couldn't agree with you more. I mean, how many companies we speak to that just can't find the right talent. They're really, really struggling. And it's also retaining the talent because, as you say, people don't just want a paycheck. If you're in tech nowadays, you can get a paycheck anyway. What they really want is a place to belong. They say it's not a company, it's the manager that they're working with. Are they your tribe? Do they believe in the same things you believe?
Right, yeah.
And whereas before, if I was going to be slightly critical, we're going to throw lots of money at the problem, and actually we're going to keep them happy just by chucking a big bonus at them. There's as long as they can earn that money anyway. So that's the one thing, and
it's still some people's answers, which is driving the market forces up as well, isn't it? So you're seeing spiraling costs of salaries as the only, and it's not the only way. It will always be a factor. That we're about to release a report in our next magazine, which looks at something there which still has salaries very much, because there's a cost of living crisis, right?
Sure.
So people are talking about inflation, and salaries has become the thing which people look at most in technology as their number one decision on joining a company. It's very perishable very quickly if you join the wrong place, and there's a price on that. And it's also very perishable when markets turn and someone's being paid 20% above what they should be doing, and that sort of becomes very dangerous for their career at the same time.
Mm.
So I think we're short of time for the show now, but it's something I could be on for the next couple of hours with you.
But you're right, you can attract someone, but you keeping them is a different matter.
Which is even more expensive, right? And and if companies really focus on their retention and getting that right, then everything around their employee experience, then I think there's a massive win for businesses in that, just as much as bringing talent into it.
Totally. And I suppose for us, those are the two focuses: the people, the talent, and also the data. So for ourselves as well, we got loads of proof of concepts running within our business where we're bringing in different types of data, experimenting with it, what can we do with it, and not only to make ourselves better, but our customers. In terms of the next 3 to 6 months, really innovating with data and being able to attract the right talent to innovate in the right way, that's going to keep me busy for the next 6 months.
Sounds like an exciting couple of months, and I'm pleased to hear it as well, because I think there's a lot of people out there who are playing offense rather than defense at the moment with the market, and I think that's exactly the right way to go. To not just try and sit it out again and wait and see what happens, but to go in there and with every downturn, there's always opportunity and winners and losers, and I think the winners are the ones who are going to go and really add value. And it sounds exactly like what you guys are up to.
Yeah, I mean, you can't put your head in the sand, right? Let's find a problem. Yeah. The harder the problem, the more excited we're going to be about it, and let's go solve it. I mean, that's how you get it. That's how you progress.
Love that. There's your quote. Let's finish up, George, by saying who should be reaching out to you at the moment? Who do you love to speak to, and where can they reach you?
So, any buy-side asset manager that's looking at innovating with their data, especially in their technology, if they're struggling with their data, they're reporting their data independence. If they've listened to up to now, then well done. Firstly, secondly, that concept of transformation and independence, they should reach out to us. And George Toursoulopoulos, just either message me on LinkedIn or go to our website, synetec.co.uk. Gters at synetec.co.uk. So, George, they can't expect them to remember my surname. It's a bit long.
You notice I avoided it at the start. George, it is an absolute pleasure. I've really enjoyed this. It's been a great episode, and I hope you guys at home have enjoyed it as much as I have. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.
Thanks very much. Cheers,
man.
Thank you.